Beyond Meat was one of the superstar stocks of the stock market in 2019. Now, if you were one of the early investors in this crazy IPO, then you could make more than 250% on your money. But if you are in since the summer, you could lose more than 50% of your investment. Now, why the stock crashed and what should we do from here now on? All about it here in this vlog.
Wolf of Dubai.
So for those who are new to the Beyond Meat stock wonder, let's have a small recap what the stock and the company is all about. Now, the company is producing artificial meat, plant-based, and they're having their own research and development, and they are already available throughout a couple of different fast food chains around the world, and also selling in supermarkets and so on. So you can see where this is going. And actually, as we know, the normal meat is maybe a little bad for our planet because most of the CO2 is produced by the cows and other animals that are living to be our dinner or our lunch. And also a lot of corporations are out there that are not thinking about the good of the meat, so they are injecting those with some different kind of chemicals, and this is bad for in the end for the consumer, and therefore they are preferring profits rather than health of the animals or the consumer. That's why we have all this vegan wave also coming more and more. I have seen a lot of positive things about that, so I think it's a trend, it's a wave that is coming now with more and more consumers and potential clients for this kind of product, and that's why it's one of the hottest stocks of the stock market right now. Now let's talk about where you can experience this kind of product. You can experience it at the White Castle, Burger King, McDonald's making a test phase in Canada, and A&W Canada, Hard Rock Cafe, and Cheesecake Factory. So you can see actually if this is really the product of tomorrow, it will have a distribution that is ridiculously good. So there's definitely potential, and this is maybe the run that the stock had as one of the only company that you can currently invest on in the stock market that is doing their own product, their own research and development, and is already in so many distribution channels out there. Now you know everything about you need to know about Beyond Meat. So let's jump into this stock. So the stock of Beyond Meat is an absolute roller coaster, and the last time I was on something like this, I had a roller coaster in my stomach as well, because this is going up and straight down again. So let's have a look. So actually the stock IPO'd somewhere in May 2019, and since then grew 200 or more than 250% in stock value, and was one of the most hyped companies because they could increase their revenue of 700%, and you don't see growth stories on the stock market that are so huge in potential and growth that Beyond Meat demonstrated us. Now, unfortunately, since then, since the peak where the stock was at around $234, we had an absolute crash of the stock until or more than 59%, as you can see here, and also the current price of the stock is at $96. Now you can see that the market value is at around $6 billion. We will come and compare it also to another big growth story on the stock market, so make sure to stay tuned, subscribe to this channel, and like this video if you like it so far and want to have more of these videos in the future. But the question is why the stock really crashed so far and so hard. Now, one of the biggest reasons is exactly when we're going into the months of October. The stock was at 143, and until today it lost about good 40% because especially in October, there was the lockup period that for investors that was already very, very long inside the stock, and early investors that was coming to the stock market, they were allowed in October to sell their shares of Beyond Meat. There's always, if a company goes on the stock market, a period where old investors cannot usually sell their stocks. This is depending on the company, can be 3 months, can be 6 months. Uber just had a recent lockout period expiration as well, and usually in this kind of huge runs in the stock and then the lockup periods expiration dates, we see a flood of running out of investors and profit savings obviously, and this caused a crash of 40% to Beyond Meat. Let's have a look how Beyond Meat it's currently standing compared to the biggest growth story of the decade. Okay, for that we will have a look into quite some numbers here, so be ready. In 2009, Beyond Meat will report about 225 million of revenue. Now this sounds quite a lot for a new startup, but compared to its value of 6 billion, this is a hell of a PS ratio. But we will come to that in a minute, because the growth of this company is astonishing 160%, and with the market cap of $6 billion, we are at the PS ratio of 26. This means that the market value is 26 times as high as the annual sales. We can see the PE ratio, the forward PE, because the company is not yet profitable, 357 as PE ratio, forward PE ratio. This is also one of the highest I have ever seen. When we're having the PE ratio that can be very high at growth stories, then we need to look into the PEG ratio, which is basically the PE ratio divided by the growth of the company, and this is a much lower number, which is 2.23. Now compared to Netflix, which is the fastest growing stock in the decade between 2010 and 2020, they made a huge gain in this kind of decade. They are currently growing 30%, having a revenue of 20.5 billion, market cap of $146 billion. PS ratio compared to the PS ratio of 26 of Beyond Meat was just 8.1, PE ratio 106, and here's the astonishing thing, that as you can see, the PEG ratio, so the PE ratio divided by the growth, is way over the one that Beyond Meat has, which is 3.58 for Netflix. Therefore, under these circumstances, the most significant metric of Beyond Meat for a growth stock, and compared to one and only growth stock on the stock market, is not that bad. So that's why let's jump into the conclusion, what we do now. So first of all, if you are in or if you are outside and not invested yet in Beyond Meat, you might experience something that is called FOMO, F-O-M-O, which means fear of missing out. This is normal for investors. Now, if you are inside the stock already and it growth so far, then you are scared that you maybe lose some of these gains because it bounce back. Or if you are on the sidelines and just waited to the stock go down and then it goes up in the other way that you think, then maybe you are in a rush to go inside the stock, and therefore let's assume that in both scenarios we will think about what you should do. If you're already in, you should definitely secure your profits, because first of all, in this kind of scenarios, the stock is very volatile, and there's the beautiful thing called stop loss, where you can just say, hey, if the stock goes below that point, then you just sell automatically my stocks. This is what I would recommend if you're already having some profits, or if you're having some loss in the stock, make sure to also make a cap there, so if it doesn't go back up, then you are secure to don't lose more. Or even if you are really went inside in the highest point and lost now 40%. Sometimes the wisdom of good investors are saying sell the losers and keep the winners. So maybe it's good just to say, hey, you know what, I tried it and I lost on this stock and I will just go out, because it can always go lower. And if you are not invested into the stock and are considering to go inside, make sure to just buy stocks on the road. This means go and buy every month or every 2 weeks the stock, so you ensure you have the average good price, because the volatility can always really kill your investment immediately, because you never can time the market. Moreover, there are earnings coming on the 27th of January, which will be also a huge impact how the stock will move from there, and it can be very significant move, especially this kind of stocks that went up so much and went down so much can go with good earnings up and with bad earnings down.